you have to turn on auto pay. All right. Then you have to keep your balances low. Then you want to make sure that you have responsible account management, which is making sure that you're not adding on, authorized users and removing them and adding them back on. You can get your account shut down like that. So just little things like that, you want to make sure that you're not doing. A lot of people may not necessarily know what a secured credit card is, and I want to make sure you guys understand this properly. All right. So now a secured credit card is which you are able to make a deposit with the bank. And when you make that deposit with the bank, in a lot of cases, that's going to be your credit limit. Okay. And with Discover Card, they have an approval process where they actually have to run your credit. So step one is they have to run your credit. And if you're approved, then you have to put down a $200 deposit. All right. Now we're going to talk about how to start with Discover from having bad credit all the way to having high limits and qualifying for other products that they have, because I think a lot of people sleep on this process. Okay. So now the Discover Secured Credit Card, this is specifically designed for people who have low credit scores. When we're talking low credit scores, they do have a limit. I would say they don't put this online, but if I could put a number on it, we're talking about maybe 560, 570 at the lowest, but it also depends on how you got to that 560. If you have a lot of charge offs, collections, things of that sort, you may get denied. However, if your score is there, but it's there from like utilization, then, but I've seen a lot of different scenarios, but again, it doesn't hurt to apply. Now, this card is not only for people who have a low credit score, but it's also for people who may not qualify for a regular unsecured credit card. Most unsecured credit cards, they're usually going to have they usually want to see higher credit scores, depending on the bank, though. So, like Capital One, which is why they merge with them, and we'll talk about that in a little bit. But like Capital One, they're always looking for, people that are probably like 520 and higher, 550 and higher. But for their unsecured, it's usually about the same, about 570 or higher. Then you start getting into Chase Bank and cards like that. That's when you're going to be looking at higher scores that are needed. But for Discover, like I said, about 570 is more than likely where you want to be. This particular card is going to give you a way to build payment history without needing a perfect credit profile. So you can have some late payments. You can have some, a couple of collections, increase don't matter. They more so want to see, okay, did you have a charge off? How many did you have? And so again, you'll know for sure once you apply. The key is to use this like a credit building tool. So when you get this credit card, you don't want to just max it out. You want to use it a certain way. And I'm going to break that down here as well. Let's go back to the deposit. With that deposit, that's not something that you pay $200 for and then you never get that money back. This is fully refundable. All right. And to get that refunded back to you, this is how it works. The secured credit card is going to require you to put that deposit down, but that deposit is collateral. And so essentially, they want to make sure that you're not only using that credit card, but that you're using it a certain way. So that deposit is going to become your credit limit. Now, can you give them more? You most definitely can. You can get them 300, 500, 1,000 or whatever you want to do. But in my personal opinion, I don't recommend that you go that route. And the reason why I say that is because just because you give a bank or financial institution more money doesn't necessarily mean that it's going to help you like you think it's going to help you. Okay. So the biggest thing is how much you're actually using. So if the limit is $200 and you're only using $30, you're only using $20 a month, banks look at utilization percentage. So if you get them $1,000 and your limit is $1,000, but you need to stay under 20 to 30%, now instead of $20, now we're using 200. So you don't have to force yourself to use more in order to increase your score more. Does that make sense? All right. Now that deposit, it protects the lender just in case you don't pay. And you'd be surprised. A lot of people have gotten secured credit cards and they have given the banks deposits as collateral and they never paid. By the way, if you're watching this and that's you, you still can call that bank or financial institution and then work out an arrangement where they can actually keep that. Where they can refund you back that deposit as long as you pay them back. All right. So now here's the credit score. Like I mentioned, I would say the minimum that you're going to need is usually the most people that get approved are around about 580. I have seen people get approved around about 570. It's really not necessarily the score. It's really going to be the credit profile. What type of 580 are you? Are you a 580 that has high utilization? Are you a 580 that has 10 collections? So there's different types of credit profiles. Now, also, depending on your credit history, your current negative accounts, as I just mentioned. But current could be a few different things. We're talking, was it like the last late payment that you had? Was it a year ago? Was it 2 years ago? The collection that you had, was that 2 months ago? Was that 3 months ago? All of that is going to matter. Now, the stronger that your recent payment history is, the better your chances are going to be when you're looking to get this approval. Okay. So listen, let me know your thoughts inside the comment section about what we've been talking about so far. If you knew that about Discover. All right. Now, the best strategy when you get this credit card, if your limit is only $200, even a $100 balance, it could easily be a high utilization. Let me break that down because I don't think people understand utilization like they should. Utilization is balance divided by the limit. So if you have a $200 limit, but then your balance is $100, that's going to be 50% utilization. The utilization that you want to be around 10% or less, preferably 5 to 10%. That's the sweet spot. So in a situation like this, it's just safe to just be around that 10% or less range. So that's going to be $10 to $20. Now I know what you're thinking. Well, Calvin, how can I build credit if the limit is really low? Don't focus on numbers. Focus on percentages. Again, don't focus on the balance. Don't focus on the limit. Focus on the percentage. So if the limit is 200 and you need to be around $10, $20, then you're probably thinking to yourself, well, what can I go buy that's around that amount of money? It's not about what you can go buy. What it is it's about making sure that you can put on a bill that you already have. What bill can you put on that credit card that's already around that amount of money? It could be Apple Music, Netflix, Hulu, Spotify, gym membership, whatever that is. That's around that amount of money. So I tell people that you need to be around 10%. And so again, that means that you have a $200 limit. You want to ideally be around $20 or less. Okay. So now Discover, they have historically been known from graduating you. This is how we make this transition. This is step one, is getting that secured credit card. And people sleep on this. So pay attention. When you get that secure credit card and you use it a certain way, you're under 20%, you're under 10%, you're in that range, you're paying on time, you're turning on auto pay so you know you're paying on time. They watch that. And why are they watching that? Let me show you. So they've been historically known for reviewing the secured credit card to help you graduate from secured to unsecured. What does that mean? This is what it means. This is where a secured card becomes an unsecured card, but you also get your deposit back. Remember, we talked about that. So you gave them a $200 deposit to get the credit card. You got approved. You were using 10%, 20%. Now, let me give a sidebar. That doesn't mean that you can't ever go over 20% or 50%. You just want to make sure if you are using it, you don't want a higher balance, preferably to show up on the credit report, because if they report that, then it's actually going to affect your credit score. So anything over 30% is going to affect your credit score negatively. So if you use $180 and the limit is $200 and that's reported to the credit bureaus, even if you pay that in full, it looks like you're using too much of your credit card. Does that make sense? And so when you're doing that, that essentially defeats the purpose. So you don't want to go that route. But if you're doing it where you're in that range and they see that, they will graduate you. Okay. So now this is one of the old selling points that they had to get people to get the card, is that would discover were new accounts after responsible use, which is typically around 6 months. I've seen people graduate around 4 months back in the day, but I would say 6 months is about the sweet spot. And again, sometimes they will graduate you before that time frame. But the current Discover Secure credit card, it says that the secured card is coming, right? But it's already there. It's already there for you to have. And once you apply, you'll be good to go. But just make sure you meet the current qualifications. Now, that is going to be how you get your deposit back. Now, to move from the secured to the unsecured, here's what we need to do. All right. Let me go ahead and bring this up to make sure I'm not. Okay, there we go. So now, when you move from that secured to unsecured, you have to do other things as well too. All right. So now you want to make sure that you obviously make it on time payments. How can you do that without having to think about it? You have to turn on auto pay. This is not something that's automatically turned on. You have to turn on auto pay. All right. Then you have to keep your balances low. Then you want to make sure that you have responsible account management, which is making sure that you're not adding on, authorized users and removing them and adding them back on. You can get your account shut down like that. So just little things like that, you want to make sure that you're not doing. You obviously don't want late payments. We talked about how you can get around that. And then, of course, the negative accounts during that review period. So again, pay on time, stay around 10 to 20% utilization, and then you're going to be just fine.